Welcome to Women in Crypto. I'm your host, Chronos, and today I want to talk about something that most people don't really enjoy, taxes. As a Bitcoiner, it's important to understand the tax law because it can weigh into your decision when it comes to buying, selling, and using cryptocurrency. Today, we're just going to scratch the surface on understanding capital gains tax. But before we get into it, I should let you know that this video is for informational purposes only. It's not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own advisors before engaging in any transaction. Oh, and this episode is sponsored by America's Card Room, the poker site that lets you deposit and withdraw with over 60 different cryptocurrencies. When you make your first deposit using the bonus code Chronos, you'll score up to $50 of free cash. Deposit with your favorite cryptos at America's Card Room. So in many countries, including the United States, Bitcoin and other cryptos are not considered to be a currency. They're an asset. This means that whenever you use them, it creates what's called a taxable event, which means you might owe some tax as a result of the transaction. As the law stands today in many countries, this includes using crypto as money. Let me give you an example. Let's say you bought a mattress for $1,000 and you paid with Bitcoin. At the time, Bitcoin was worth $10,000, so you pay 0.1 Bitcoin for the mattress. Simple enough. But when you bought the Bitcoin a couple months earlier, let's say it was worth half that amount, or $5,000 of Bitcoin. So you multiply that initial purchase price by the amount you used, 5,000 times 0.1, and you get 500. That's called the cost basis of the Bitcoin. Because you paid $500 for the Bitcoin you used, but it was worth 1,000 when you used it. This means you had a gain of 500, and you need to pay taxes on the difference between those numbers. Yes, even though you were just buying a mattress and not really selling the Bitcoin, from a tax perspective, it's as if you sold the Bitcoin for your local currency and then bought the mattress with that. The nice part is, if the Bitcoin lost value, you can capture that loss and count it against other gains. I know taxes aren't a lot of fun, but when it's all said and done, I like to think you should enjoy it if you're paying a lot of taxes. It means you're making a lot of money. If you have any questions, feel free to throw them below the video. I'm Chronos. Thanks for watching.